Okay, today is May the 20th, and I thought I would show the first 30 minutes after the U.S. Open in the market replay recording of the market today, and the first three trades I made. And I'll try to show this as close as possible as it happened in reality, and try to be as accurate as possible about the decision criteria that I use to make the trades. So let's start it here. Start the market playing. Right now I'm 2 seconds before the 6:30 opening Pacific time. So we'll start the market as it would look like as it opens. Remember, the first objective here is to look for a fractal formation and not to jump the gun until we get that 1, 2, 3 pattern. And sometimes that requires a little bit of patience there. At this point, I really don't know what direction it wants to move, so I'm not going to follow every tick. I'm just going to wait for a definitive pattern to occur, up or down, before deciding to enter the market. That's one trade I could have made, but as you see, this fractal here had occurred before the market open, and it's really, if that's a number 1 point and that's number 3 point, they're sloping the wrong direction. So ideally I'd want to see 1, 2, 3 right there, and then it would be a good long trade. But that happened so quickly, there was really kind of took me by surprise, so I didn't enter that trade. But that would have been a good 5-minute trade if I had entered at the open there. That is, at the same position as the close in the previous bar. But this is one I missed. As we can see, it moved way outside the upper Bollinger Band, and the Bollinger Band here is flat, and it's reversing. So this right here already put up some red flags that maybe I don't want to be in a long position here. And besides, we're getting that downturn right there. I don't really have 1, 2, 3 high pattern either, or 1, 2, 3 top pattern, and I don't have a crossover yet, so you don't want to jump the gun the other way either before you get that fractal forming. But it definitely looks like it's trying to cross over to the downside. You just can never tell. I've seen many times it looks like that, and it will continue in an uptrend. That's why it's really important to wait for the 1, 2, 3 formations, or fractals as they call them. Not really a fractal yet here, so the general rule is I've got to either see a fractal first, 1, 2, 3 top, or I've got to see a crossover first before I can take the trade of that first bar to the downside, because this could easily be moving up like that. So you wouldn't want to jump in that trade early. You'd want to wait for number 3 point here. This looks like a number 2 point on a, let's say, a 1, 2, 3 point to the downside, trade to the downside, but it might not make a number 3 point. So right here, if it breaks below, let's say this low or this low to the downside, it'll pull that. There we go. So if that is a 8-EMA crossover trade, and it's compliant with what we're seeing on the 5-minute chart here. See, we're seeing this bar just plunge right here. So we're trading in the same direction as the 5-minute chart. So that's a signal to try to enter a trailing stop loss type trade. Even though we don't have a proper 1, 2, 3 formation, that's good enough signal for a crossover to me. It would be a breakout of the number 2 point here. See how fast that occurs. It's at this point, since this bar is still moving upward a little bit, I don't want to move that stop loss too close yet. I'll just keep that. Now we've got good downward movement, so I'll just I'll move it at a risk. And now we're in a trailing stop loss position. But I kind of had to move quickly there, so I dropped. What I did is I dropped the target when I saw it break below this number 2 point. Didn't make a number 3 point, but it made a number 2 point. It dropped below this support, of these previous bars. At the same time, the 8-EMA line was crossing over the 14 simple moving average. So now we'll just, it's a simple matter of trailing this trade down as it moves downward. I know the market seems like it's moving really fast here, but that's pretty close to actual time. Those early morning trades, it really does, after the opening, it really does move fairly quickly sometimes because people are really agitated. So yeah, the current tick is far enough away from that high that I'll just move it down some more to lock in some profit above the high of the previous bar. A lot of times when it comes close to the time for the new bar to form, you can just go ahead and anticipate and move that trailing stop loss down to lock in profit. Because we're in a short position, the trailing stop loss is a buy stop, because that'll offset our short position if it were to be hit, and we'll be out of that trade. So this really, in many ways, is the simplest form of trading, because you're deciding, you're letting the market decide on how much it wants to give you, rather than arbitrarily set a target. Okay, we got the new price bar, so we just keep moving it down. And as you can see, we've got the current price bar, and we're pretty much about one tick above the high of the previous price bar, and we would just reverse this process in an uptrend. Same deal, but just the reverse. Instead of above the high in a downtrend, it would be below the low in a uptrend of the previous price bar. And see, we're already up to $800. Sometimes if you feel it's going to reverse, like that move outside the Bollinger Band there, and you could probably get out there and retain a little bit more of the money there. See, now we're back to $600, so lost a couple $100 right there. But then again, you never know. That looks like it's going to reverse right there. So we'll just move it slightly above the high of the last bar. Often before it reverses, you'll find the bars start getting shorter and they get closer to the Bollinger Band. And then on the reversal bar, it'll break out of the high of the previous price bar in a downtrend, or the low of the previous price bar in an uptrend, and that'll be the sign of a pending trend change, or you've got to look for another P3 point. Often it's a sign of a trend change. Okay, so we'll move it down and lock in a little bit more here. See, what I was suspecting was happening in live trading here was that we were seeing a little 1, 2, 3 formation there. There we got stopped out. So $575. it was all the way up to 800, but no problem. You would think, according to the rules here, or my rules, that if that's a 1, 2, 3 and a breakout of that number 2 point would signify a reversal. The only problem I have with that is that this Bollinger Band is still sloping down. I mean, not the Bollinger Band, but the ADMA line is still sloping down. For it to be a reversal or a trend change, I want to see this ADMA line come up and almost cross over that 14 SMA line. The 14 simple moving average line, of course, is that magenta line, and that's the actual center line on which the Bollinger Bands are based or calculated. So theoretically, in lower volatility, you wouldn't want to mess. If you suspect a 1, 2, 3 bottom formation is forming here, low volatility, you wouldn't want to try to trade the number 2 point or the suspected number 2 point to the number 3 point. But the volatility is high enough here that we could risk a trade like that. But I'll play it safe here, and I won't. See, that might be a good, right here, taking a short trade. Short 5 point trade would probably result in a profit. so many of these, though, it doesn't give you that opportunity. It'll just keep moving up, so it's a riskier trade. So I won't even do it here, even though I know it would have worked out in reality if I just gone short right there. We can see how the 8 EMA line is bending inward, and so technically you want to wait for that line to be sloping back down in the direction that you're trading before you try to enter it. See, that would have been a good entry right there, but for the sake of being cautious, I'll just show it purely by the book here. And so we've got a small 1, 2, 3 bottom here, but it looks like a larger intermediate 1, 2, 3 is forming, and so that's very common. And look what it's doing over here in the 5-minute chart. It's closed outside the lower Bollinger Band, and it's reversing. So that's a sign that you're probably going to see some retracement all the way back up to the 8 EMA line on the 5-minute chart, or some level of bounce here. So we know that the 5-minute chart is heading this direction, or up, in the up direction. And we want to try to trade the 1-minute chart in the same direction the 5-minute chart's moving. Even though that's not a trend, this would be considered a retracement swing in the 5-minute downtrend. So that entry was a little bit later than I probably entered it in reality, but that's another good sign when you get the price bar crossing the magenta 14 simple moving average line. That's a good sign that you're looking at a trend change there. Combined with the 1, 2, 3 bottom, and as you can see, we hit that target. If you look at the 8 EMA line as a sine wave, you could see that this is the down cycle of the sine wave, and you wouldn't want to try to trade an uptrend here, but you can see that it changed direction here. Now we're in the up cycle. So if you're just kind of doing an eyeball estimation, you should get if it's the same proportion as over here, you should get another up cycle, sort of an arc like this on the sine wave. So that's what you're kind of anticipating, and you want to trade the upside of that. But since we've got the Bollinger Bands converging here, as you can see, they're moving inward towards each other. That's a sign of an impending range, trading range, even though there's really good distance between the 8 EMA line and the upper Bollinger Band. Still want to use trading range rules here until you see that thing starting to trend again, which would have to come down and make a P3 point, and then start moving upward, and the Bollinger Band would start to spread out. Right now they're converging, which indicates decreasing volatility and sideways movement into a trading range. So what we'd normally be looking for here, see how it started to move up a little bit? You've got to see that P3 point first and touch the ADMA line before I can think about going long. But see how long this drop is here as it broke below support of this price bar here and into the ADMA line, and it's starting to bend this downward. That's a strong red flag right there that, hey, you're in a trading range and it's probably about to reverse on you. It might make a little move back up to make a 1, 2, 3 point, but you don't want to do anything yet until you get that number 3 point. And as you can see, as it's moving down, you'd only want to enter a long trade if it starts really moving upward. See, like that's really not convincing yet, because we've got such a long drop. So what I'm expecting is a 1, 2, 3 top formation. So in reality, in the real live market, I'm thinking at this point, okay, you're not fooling anybody. You could probably make a short trade here to the upside and get 5 points out of it, but the rules in trading and trading ranges is you want to trade with targets if you're going to try to trade them, and only try to trade one trade each side of the the ADMA line. As we can see right now, it's starting to bend downward as we would predict of the sine wave cycle. You don't want to be trading enough trade on that downward move here. In real life, I decided, you could make a successful short trade right here. And if we looked at the larger market, that's a big 1, 2, 3 pattern. If you want to look at it as a huge pattern here. So that would have been a successful short trade, but ideally what I like to see first is either 1, 2, 3 formation, or I want to see a crossover of that ADMA line first. Right here you don't have either of those, so I couldn't really go short. Even though this probably would have been successful, trading short here would have been successful, and I think there's another one occurred about here that would have been a good trade. But here's this. If we're looking at a range, you can see what if I can get these boxes out of the way, you can see on the 5-minute side, it's all in the range of these two bars right here. It's moving somewhat sideways, and we've got support, major support right around here, and you can see that same support on the 1-minute chart right here where the low of the market is, which is that red dashed line. It's indicating the low of the market for the day. That's the lowest point it's reached, but that's also the support area, and so we don't have long to go before it's either going to hit support and bounce off, or it's going to pause for a moment and go sideways before trying to break through support. Often it's not really an easy process. It'll act like it's hitting a solid area and bouncing upward. So that's all a sign that we're in a trading range right now. So I want to apply trading range rules. See how it's resisting trying to cross over, and we've got a bar heading the other direction. Those are all signs that this is really resisting moving downward. So I'm seeing an upward bias to the range right here. Also, we've got 1, 2, 3. We've got 1, 2, 3. Another higher 1, 2, 3. And all those formations here tell me it's trying to move upward slightly. So I probably don't want to be a short trader here, even though I could probably have a good trade right here to cross over. So I wouldn't have been hurt if I'm trying to trade the crossover right here. Oop. So here's where I would have entered the trade late. Okay. Or I think that's where I would have. Actually, that's not where I was trying to simulate what I did in reality, but yeah, that was a mistake. That's not what I actually did. You've got room for a short trade right here. So ideally, it would be very common to make a short trade right there, and that would have been successful. That would have been about 5 points right there. But I jumped the gun because I knew what I did in reality and was trying to simulate it there. But yeah, that's not when I entered that trade. So sometimes knowing in advance is a bad thing, but I'll just leave it there for illustration. So what I was seeing at this point, this is when I actually entered that trade. What I was seeing was the Bollinger Band starting to bend upward, and I'm seeing a large 1, 2, 3 pattern, and I'm seeing the crossover here. So that's kind of a sign to me to enter a trailing stop loss trade. But in the reality, I entered it kind of late. And that's what I wanted to show with this. But my timing was off. But so what I'm showing here is if you've got enough capital, you can add on a trade. So now I'm I'm in a two contract position, and I'm keeping the target on one. Watch what happens to that average position line when that target's hit. Leave me with only long one contract. See how it moved the average position line down below? So that's how I would, in other words, that's the average position where it would break even. The market would have to drop to here to break even for that trade. So I'll just do a normal trailing stop loss trade from here. That's pretty much how I entered it, except for that timing error. I only made that error because of trying to simulate it or anticipate it, knowing what I did, but that's a bit earlier than it happened in reality. So it's the same process here. We're just following it up with a trailing stop loss. I know I've already kind of messed up this video, but anyway, it gets the idea across. I'll just keep doing that till I'm stopped out. See how we're at resistance here? I'm actually still in a trading range, but I'm treating it like a trending trade because we've got sloping upward Bollinger Bands, got a sloping ADMA line or opening from the 14 SMA line. So those are typical signals of a emerging uptrend after the crossover. So yeah, I decided to trail the stop loss based on those criteria. A little bit closer. Okay, so it got me out at 1,000 even. Whether that's accurate or not, it was probably a little lower in reality, but that gives you a good idea on how some of those trades are done, with the mistake being made here mainly because I'm doing a recording, and so that kind of messed me up. But I was just trying to quickly show what I should have shown as a delayed entry into that up move. I would have been far more careful in real life, but yeah, I just jumped the gun because I was doing the recording. Anyway, you get to see the principle of how some of those things are entered, and so that's the main purpose I wanted to create this video anyway, and it's a shorter video. So have a good one.